Hey everyone, Ben here. Why are tech stocks still declining? Well, in this video, we're going to find out. I'm going to give you guys 3 reasons why I believe tech stocks are still declining. I'm going to give you my prediction on where I think the bottom is for this tech stock decline, and also what I'm personally doing. Am I buying the dip? Am I continually buying the dip on this downturn? All will be revealed in this video. Before we dive right in, if you do appreciate updates like this, feel free to give this video a big thumbs up. That helps out tremendously with the channel. If you haven't subscribed yet, hit that subscribe button and turn that notification bell on. To start with, let's just dive into a market overview to give us all perspective on this downturn in the tech sector. Diving into the S&P 500 chart, we can see the S&P 500 is actually up year to date. So if we go back to March there, 6th of March, S&P 500 is up 29% year to date. So this is definitely not a market crash. It's definitely a correction affecting a specific area of the stock market, generally growth and tech stocks. So if I dive into the NASDAQ here, so this is basically the tech index, and we can see the NASDAQ, if I dive into it here, it's down 8%, and that is basically what we're seeing in these individual tech stocks and these growth stocks. We're seeing them get hit because they were priced at high valuations. So a question you might ask straight away is, okay Ben, if tech stocks are declining, where could the bottom be? Well, diving into this technicals chart here for the NASDAQ, and this basically is looking at the moving averages, and we can see it's actually dipped below the 100-day moving average the NASDAQ has. So that means it could travel a little bit further and actually hit the 200-day moving average, which is this yellow bar here. So we could expect a swing to around 12,347 on the NASDAQ. So that's just something to be aware of. If you want to make a note of these exact points here, when it hits here, then that could really be the bottom for the stock market. Of course, no one can truly predict the bottom of any downturn or any correction, but this does help to give us some sort of indication. Okay, so now let's dive into a specific stock. Let's talk about Tesla. So I did a video a few weeks back. Full disclosure, guys, I do like Tesla as a company. I think it has great long-term potential, but I did a video on it, and I basically said a lot of the major shareholders, it was just a news update, are selling out of their Tesla positions, and they've trimmed their Tesla positions heavily. Even Ron Barron has trimmed his Tesla position, and he was one of the original Tesla bulls. So basically, I saw that as an indication if this could be a good time to trim some of our tech and growth stocks. And I personally did that, and I informed everyone in the VIP group that I'm trimming my Tesla position. I only had a small position anyway. I've gradually trimmed it as it's ran up. So I trimmed my Tesla position. I trimmed a few other growth stocks. I didn't trim them as much as I wish I did, but I still trim the positions there. But let's put things into perspective for those that didn't trim the positions, because I know a lot of you guys, you're new to the market, and if this is your first downturn, I'm sure you're going to be fearful. You're going to be thinking, how far will this go? You're going to see your portfolio red and you might be panicking, especially if you've gotten to the stock market in the past few months. So my goal in this video is to give you guys a bit of perspective on the whole situation. So if I dive into Tesla's share price here, we can see Tesla is down a massive 30%. Now that may sound like a lot, and it is a lot. However, let's look at the Tesla run up. So this is down, basically Tesla's down to the same price that it was back in December 2020. So it's literally down to the same price it was a few months back. So to me, that's not a massive decline. Of course, if you got in here at the top, then you're going to be really feeling that in your portfolio. So that's why I always say on this channel, even a great company can be a bad investment if you get in at the wrong price. Now, the stock's not really had a major downturn yet. For example, if the stock dropped to maybe this point here, around $400 a share, I'd probably buy more Tesla actually at these levels here. So that's just an example of one of the growth stocks which have been hit by this downturn. Now what I want to do is give you guys a bit of perspective, because where's the money gone? Because money in the stock market moves from one place and moves to another place. Sometimes it goes to cash, but very rarely. Usually it goes into other stocks and other assets. One of the main drivers I can see for this market downturn, and there seems to have been a rotation from tech stocks into more cyclical stocks. So I'm going to point out a few to you here. So oil stocks are actually booming at the moment, and I go up from March. Shell is up 60%. Now, I did personally have a position. I bought it literally near the bottom here in March 2020. I sold out these highs here of Shell. But yeah, oil stocks are booming. I'm going to bring up a brief snapshot of one of my other portfolios. So this is a small account I had, mostly UK stocks, and they're basically booming at the moment. So I don't know if you guys can see this here. So there's a few stocks here, and it's not because the fundamentals are fantastic with these companies. It's just because there's been a rotation. The market is always forward-looking, so it's always looking one step ahead. Even though we're still in the middle of this global lockdown, people are looking at these travel stocks. This is an insurance company. This is a UK building company. So we've got On the Beach here, which was a travel company which I purchased back in March, up 185%. Legal & General up 65%. Aviva up 60%. So these are major sort of gains. I wish I put more into them stocks, to be honest, but these are major gains in the market. So that's where the money seems to have gone. It seems to have pulled out of tech and gone into these sort of cyclical and more value plays. Now, before I get into the two other main drivers, which I can see have caused this correction in tech stocks, I want to point out to you guys that the economy is actually doing really well. So we're coming out of lockdown now. Vaccines are being rolled out across the world. So really, the stock market should be rewarding this. So this is the latest job report from the US unemployment market, which is a great sign of economic activity. So the job market picks up on strength, led by food and drink. So US employers added 379,000 jobs to their payroll in February. So another metric which I like to look at is the manufacturing index. So this is the ISM manufacturing index. And as we can see here, generally you would expect if manufacturing is increasing, then that's a good sign for the economy. So if I dive into here, obviously back in April, manufacturing was at an all-time low. Now we can see manufacturing actually has had a major boost, and we're back up to these highs here. If we go to the 5-year chart, we can see that the manufacturing index is basically at highs that we saw back in 2019. So this is a great sign for the economy, and it means things are moving forward, things are picking up. I personally think the economy is like a coiled spring, and as things start to reopen, we're going to see a major boom in economic activity, which is great news for the stock market. So I know what you guys are thinking, Ben, this all sounds fantastic. So why is stock still declining? Why are these tech stocks still declining? Well, one of the main factors I can see, and I did a full video on this previously, is interest rate. Now, there's a simple relationship between interest rates and the stock market. And basically, as interest rates rise, stocks tend to decline. And the reason for this is people have other places to put their money, basically bonds. So if bond yields rise, you're getting a higher interest in your bank account. People will be more likely to keep their money in their bank account, keep their money in bonds as the interest rates rise, rather than risk their money in the stock market. So this is what's affecting the stock market right now. I'll just show you this inverse relationship here. So there's a chart here, and as you can see, in black is the interest rates, and in red is the stock prices. And as you can see, if I go back to 1981 here, we can see interest rates were at really high levels, 15% there, and stocks were at really low levels. So it's an inverse proportional activity. And as at the start of 2020, we saw interest rates reach all-time lows. Some interest rates even went negative for a period of time. So of course, that caused a major boom in stock prices. And now if we dive into the actual interest rate chart, so the interest rate today is currently at 1.56%. So if I dive into this chart here, so this is 1.56%, and basically this is where we're at the moment. And as you can see, this is when the sell-off started, probably late January, February, and interest rates have gradually started to rise. So they've nearly doubled from the start of February. They were at 1% at the end of January, and now we're at 1.56%. So that's what we've seen as a proportional decline in the prices of tech stocks. Now, a question you may ask, I know I personally asked this question, well, how high can interest rates go? Will interest rates keep rising? Well, prior to the whole pandemic, interest rates were at around 1.56%. So we could say that this could be okay, okay period. But in January, they're at 1.8%. Back in 2018, they were at 2%, over 2%. So I personally think interest rates could reach 2%. If we look at probably in the short term, they could reach maybe 1.8%, possibly 1.9%. So basically, the higher these interest rates go, the lower these tech stocks will tend to go. And I know what many of you guys may be thinking right now. You may be thinking, what about the Federal Reserve, the central bank of the US? What about Jerome Powell? He stated on an interview he can control interest rates. He will keep interest rates low. And this is a myth, and I need to actually explain it to you guys because it's a myth which everybody seems to talk about, even people on CNBC. And that is that the Fed controls interest rates. The Fed doesn't control interest rates. it only influences interest rates. So what the Fed can do is send a signal to the market by setting what's called the Fed funds rate, which is basically the interest rate which banks get charged for overnight lending, I believe. The Fed can't actually control interest rates directly. They can buy other financial assets to help to influence them also. So maybe they should be doing a bit more of that. And that's why there's been a lot of hate at the moment at Jerome Powell. But I hope that's helped to give you guys some clarity. If you do want to know more about the relationship between stock prices and interest rates, then check out my link in the description below for a previous video I did. But it's clear from some of the information I've shown you so far that the economy is actually doing really well. And it's just tech stocks are actually moving back to probably more sensible levels, which they were at maybe 3 or 4 months ago. Now, of course, this may not make it feel emotionally better for you guys if you've got a portfolio of all sort of heavy sort of tech stocks and maybe you've got in all-time highs, but hopefully this can help to give you a little bit of perspective. Now, my number 3 driver of this tech stock correction, which I do want to get into, now there's been an international semiconductor chip shortage, and of course, if we're going to have this technological boom, if everybody's going to be driving autonomous electric vehicles everywhere, there's going to be a lot more electronics in our homes, then of course we're going to need a lot more semiconductor chips. Now, you may not think this would be a major problem, and of course a stock like Taiwan Semiconductor is benefiting massively at the moment, but there is a major chip shortage, and that's also affecting many of these tech stocks. So even GM has extended its plant shutdowns due to global semiconductor chip shortage. So I believe GM has recently announced to be actually moving a lot more towards electric vehicles. So of course they're going to need a lot more chips, and even in normal cars anyway, you need a lot more chips for all the infotainment and entertainment inside the vehicles. So I know what you guys are thinking. What am I personally doing at the moment? Well, let me just tell you guys what I've been doing. So I've not been going crazy, but I've just been nibbling on a few of my favorite stocks. I've been dollar cost averaging into a few of my favorite stocks. Maybe I should have held out a little bit longer, but I've just been dollar cost averaging in to a few stocks. I'm still sort of holding back at the moment, so I'm waiting to see what happens. I'm waiting to see some real value in the market. Even a lot of these tech stocks which have declined by 30%, they're still not cheap at the moment. Even stocks like Amazon, it's a great company, but it's still not cheap at the moment. It's not like it was back in April, March 2020. If it was that cheap, I'd be loading up the truck. And to me, that's a market crash. So really, when things go really bad, that can actually be a great opportunity. And as I always say on this channel, volatility equals opportunity. So anytime there is volatility in the market, I've got a few friends who actually recently joined the stock market. They've recently come in, and this is the perfect time for them to actually join because they're coming in now. They've missed this whole correction. So they're poised and ready now to actually invest into some great stocks and find some great deals at the moment. So that's what I'm personally doing at the moment. I have been in the VIP group every single day, replying to comments, speaking to people, giving my thoughts on the whole situation, basically just supporting everyone in the group because, of course, everybody's at a different stage of their investing journey. Some people have just started investing, and this is the first downturn they've seen in tech stocks. And honestly, this isn't really even that bad. It's nothing compared to what happened in March or even the 2008 financial crisis or any major crash in the past. But if it's your first one, it can be very painful, especially when you see your portfolio. But hopefully this will be a great lesson for us all to actually learn in the market and actually be a little bit more disciplined in the market. I know I'm personally going to be a lot more disciplined, especially with my valuation. I've actually been one of the more conservative valuation investors on YouTube, and I actually feel privileged to actually be in that position, keep a level head during these crazy times, and actually still make great gains in the market. Now, in the future, I'm going to sort of actually be even more so that way and actually even improve my valuation skills. So I did a previous video on exactly how to value a stock, and I've dived into sort of a few different valuation spreadsheets and some advanced valuation techniques, because when you know the value of an asset and when you know what you own, which is a great piece of advice from the legendary investor Peter Lynch, if you know what you own and you know the value of what you own, then you don't care about the market price. And think about it, say you own a house. If you had somebody knock on your door every day and tell you your house is now worth 100k, next day knocks on it's worth 150, next day knocks on it's worth 90, next day knocks on it's worth 80. If someone did that every day, of course you're going to be panicking one day when he tells you it's worth 80, and then the next day when he tells you it's worth 150, you're going to be really happy. And that's basically what we see in the market. These market prices are just quotes. And the market is not our master, it's our servant. So the market's there to serve us. When we want to interact with the market, when we want to sell into the market, when we want to buy, that's what we can do in the stock market. So that's a few little points I want to point out there. Here's a quote from The Intelligent Investor, legendary book, which Warren Buffett actually cites as his favorite investing book. So the intelligent investor realizes that stocks become more risky, not less, as their prices rise, and less risky, not more, as their prices fall. And one man's crash is another man's treasure. So this is basically what we need to realize in the market. We need to have perspective with this whole situation. Think long term. This won't last forever. This too shall pass, and the market moves in cycles. So there's upswings, there's downswings, and basically as investors, we need to think long term and keep perspective and have a diversified portfolio, especially if you want to continue playing this game for much longer, for generations to come, and actually build that generational wealth. And I hope you guys will join me on this journey. I'll be with you guys through the downswings, the upswings, but hopefully providing that filter, that clear, level-headed perspective, no matter what is happening in the market. So if you guys did find some value in this video, feel free to give it a big thumbs up. That really helps out tremendously with the channel. If you haven't subscribed yet, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you do want access to my live buys and sells, I've actually been buying a few more stocks during this whole downturn, then feel free to check out that first link in the description below for the VIP membership group. You also get to access my entire portfolio and see all the diversification in there. I'm extremely diversified. I've got stocks in the tech sector, I've got stocks in home building, I've got UK stocks, I did have oil stocks, but I've sold them recently. So I've got a variety of stocks in my portfolio, and I think that can be a great inspiration to you guys in the VIP group. And also there's a thriving community. We all support each other. Everybody's at a different investing stage. We've got people in there with a $100 portfolio, $1,000 portfolio. We've got people in there with a $100,000 portfolio, $1 million portfolio. So everybody's at a different investing stage, and we're all there to support each other through the downturns and the upswings in the market. With that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.